Good
Okay.
morning, everybody. It's 9 a.m. on Tuesday, June 1st, brand new month. My name is Ben Maldonado. I'm here with Barry Hedaraki. This is the Plus3 Stock and Commodity Forecast Show. A big week coming up. Uh, Barry, what do you see coming down the pike this week?
I think it's a
Two
big week for
months.
the it's a big week for the markets. Looks like we're starting to break a little bit off our levels, and number of other things. Crude looks like it's breaking out. So why don't you start with Bitcoin and we'll just work it down.
Okay. On the screen, you see Bitcoin. It is continues to display the bearish characteristics that we pointed out a month or so ago. This consolidation that we're seeing right now is typical of fourth wave action, strong up and down, basically going nowhere. Unless we can get above this resistance in the 42,000 area, the odds favor more weakness and a break to new lows for this leg. What are your thoughts on Bitcoin right now?
I think that's pretty much right on. That's exactly my thinking. And there's also a simple trend line coming off the high before the break, and that's still intact. There's one, and then there's the next one, the steeper one, that's still intact. Mm-hmm. And I think that 41 area is critical. So we'll see how we do. It looks weak. So
yeah, and I think again we talked about these targets last week. 24,000 looks pretty much like a high probability destination minimally. If it really gets going on the downside, you're looking at 15,000, and then while it seems crazy, 6,500 could be in the cards.
At some point.
I mean, if this thing gets going, we're just looking level to level, and that's what we try to do with these squares. Is you trade them level to level, and then you let them, let the market tell you where it's going to go. Is it going to hold this level, or is it going to break down and head to the next level? So these are the stair steps that we watch going down, because there are areas where there's a high probability something's going to happen. You're either going to hold this and head back up, or you're going to break down, fail, and then continue down for another leg lower. So Bitcoin does not look good for the bulls in the short run. We'll have to see how price plays out and how the breakdown out of this triangle actually manifests. So let's switch over to you, Barry. Run through your weekly 4 or 5 and highlight the markets you want, and then you can come back to me and I'll tell you the ones that I'm focused on this week as well.
All right, sounds good.
Looks like the S&P.
Yep. Let's just take it down through the different charts. So ES, since we've been talking about this weekly, we don't have to recap all of it, but just to say that we've been watching this 50% line, which is around 42.03.05 level, and we wanted to see prices below that to show weakness and strength above. And so there was a little bit of a consolidation. There's a ascending triangle forming. We've been watching that. So it looks like we're slowly grinding higher above those levels. So at this point, it looks bullish and looks like we can clearly reach and test a little bit above 42.50. And we'll have to see how we do there afterwards.
Yeah, 42.50 is a good number. I have that on the chart I post on Twitter every day, the 60-minute ping pong chart. The upper level right now is at 42.50. So that's definitely where the magnet for price is at this point.
Yeah, and depending on how we do there, it looks like we could, if you look at this trend line going on top, we can even really test close to 43, 42.90. That's up there. Mm-hmm. And so all that is game above this level, which is 42.03.05, that level. And I was just looking at the weekly just to bring it up, just to put some perspective on things. And here's the weekly, and look at that steep climb we're doing.
Mhm.
And from that perspective, it looks like we should, based on the weekly, we should at least hit, the upper 42, 43 area, which is right in between these dotted line and the dash line. The half square up is around 43.50. Okay, so that's the potential. On that last correction, we really didn't take out this line, and we know these lines can't hold forever. So it's just a matter of price and time. It looks like price is a little bit above us, and that's just to give you some perspective where things are.
Yeah, I can't help it.
Weekly.
Yeah, I can't help but thinking, looking at your weekly and this daily here, the steepness of the weekly and the fact that we're getting jammed into this point on the daily, it has me on alert for potential false breakup here.
Definitely a possibility, especially because the trend is getting a little old here and at a very steep angle. So we got to definitely be on alert. Enjoyed the party, but you have to be a little careful in here now. Next, let's just quickly look at crude. And we kind of boxed it last week because that's where we seem to be consolidating. And we're still within the box. We have little targets up above around 70, $69, $70. But we're kind of grinding and holding the space. The lower trend lines are holding. Not much. I think we have to be thinking bullish above $60 and nothing really bearish here. You have anything to add to this?
Yeah, this morning crude's up $2, so I think the breakout's there. We're at 68.50. So I think we've been on this for last 3-4 weeks, and crude is definitely in the bullish phase. I'm very, very aware of this 70 area where we have a lot of resistance. So we got to see if we can get up there and how we act up there, because it looks like it's heading to that spot.
So this is a weekly chart, and you can see we have a little bit of resistance up above with this fork, but we're also holding this trend line just like the S&P very strongly. And a breakout would definitely put us into a whole nother level. Mm-hmm. And this sort of buildup looks like it's gearing up. It's making higher lows, so it's tightening up into this similar ascending triangle, but a little bit drawn out. You see that right in there?
Yeah.
All right. Next, we have gold. Well, Ben, you've been bullish on this since March.
That's right, in March.
And that's worked out really well. I think from last week, we were really looking for gold to hold above 1850 and looking at targets around above 2000, 2030 or so. And we did that. Last week we came back and checked the 50% of the square line, which is around 1854. And well, we're grinding higher. It looks okay. Do you have anything to add to that?
Just the structure and the cycles and everything are kind of lining up really nicely for gold and silver. They look strong. The charts are following through. The price action observation that you and I talk about on a daily basis is any weakness intraday is bought up.
Exactly.
It was down 10, 15 intraday a couple times last week, and it ended up flat or up for the day. So somebody wants to own gold, somebody with deep pockets, and they're buying it. So should we. We should be in a position and look to ride it, because when it goes, it's really going to go.
And there's still room left up here. 2035 looks like the next place it's going to reach up to. Mm-hmm. And as long as we're above 1850, it's market's in good shape. Let's take a look at. Let me see what the weekly looks like. So weekly, we came down in March. I think it didn't quite get to the ABCD, but as soon as we cleared that square main level around 1750, we knew it was heading higher. So there we are, and half square is 2120. So on the weekly, there's a bigger picture. We have a higher, looks like there's definitely room to go. Not that it can't consolidate here, but there's definitely room above.
Yeah, and I remember our conversation too when we were saying, "Wow, we can't even make an ABCD. It couldn't even get down to satisfy that target." That was a sign of strength.
That's right. Exactly. We saw what happens.
Yep.
Let's take a quick look at bonds. Um,
Bonds are looking weak again.
Bonds are looking weak. I added this purple line, and I'll explain that in a second. But last few weeks, we've been talking about bonds holding firm above the square, the 144 square. It was around 55.20, and it's been doing that. We're looking for weakness below that. If we get stuck below, right now we're kind of stuck above, so it hasn't quite tilted, but it's not exactly looking bullish.
No.
But it's not negative. It's sort of in a holding pattern, but on the positive side. So the key level to watch is 55.20. And to the upside, if you're really going to get a breakout at this point, it's really this 59.04, 59, let's just say, is where we need to settle above.
Right.
And that 59, we're getting that off the weekly chart, which is, well, I added a few things, I guess. We can leave it on there. On the weekly, we're going off the low, October 2018 low. We went up 90 degrees. It was the high in 2020. Retest here, we sold off. Now we're stuck below the 50% line of the square. All right, which is around 59. And that's the square that I replicated on the daily. So it's easy to see. It's 59.04 is that line from the weekly. And you can see how strong that is, right? It just can't seem to get above. Tried a few times. So,
and Barry, just to let people know that aren't familiar as we are with the squares, when you're stuck below the 50% line, that's generally bearish for price.
That's right. This is definitely not positive. It can hang here and eventually go higher, but it has to do it. Up until then, the probabilities are it's in a weaker position, probably going to at least go and test this old low here. So yeah, it's a little soft, and until we get above this 59 level for obvious reason. But up until then, it's not exactly weak either. So and that's what it's showing, right? Look at the last couple of months, just slosh back and forth between the two levels. So the levels are good. We just need a break to one side or the other to really figure out the market's going to start moving again.
And that's a good example of what markets do is they frustrate bulls and bears before there's a big move. We've seen it time and time again. I mean, you go back a couple months, like look at from the move from October to January, sloshing around, and then you have the big move.
Exactly. So that's our bracket. We're waiting to see if it's going to break to one side or the other. And let's just look at Euro quickly. I think last few weeks, ever since the market got above the 50% line, which was around 2059, we were bullish. We were expecting the euro to go higher, and it's been doing that. So last week we had a check back. I can't remember where this dotted line comes from. It might be from the weekly chart or some support line. So that's at 21.42. So last week we tested that and we're moving higher. And the trend line is holding. So far, it looks okay. It's a little sloppy, not exactly a raging bull market, but it's holding and it's pacing. It's making higher lows very methodically, right? So I think it's on a firm footing.
What's interesting to me in looking at this Euro USD chart is that if bonds do in fact break down and interest rates go higher, that should support the dollar. So that would probably coincide with the breaking of this trend line. Otherwise, if bonds are firm, meaning interest rates go lower or stay the same, the euro should continue with strength. So watching how these markets interplay is always important to see how it lines up.
Yeah, and it's been checking back pretty well coordinated. So, oh, there's looks like there's a little possible target here. Let me take a look at this. All right, so if you put up an ABCD, we have, well, the target's pretty close to 72. So, and that's right up in 2418, 2420 area up here.
Right.
So that's a possibility, right? As long as it's above these levels, it's going to drift up that way. And
Sure.
That looks, yeah, nothing much. It's long as a direction to play. Let me look at the weekly. So weekly, again, going off the low in 2020, there's still room to run. We haven't quite, at least to test the old high up here. Old high that was put in January. And yeah, let's wrap it up on my side. Yeah, I'm done on my side. Let me throw it over to you then.
Okay.
All right.
So one of the things that we've been discussing on the shows, and Barry and I discuss all the time, is we look at, what are other markets doing? Can you see this chart that's up right now, Barry?
Yeah, looks great. Looks clean.
Okay. So this is the NASDAQ 100 futures NQs. Notice that we are in the process of making another lower high, while the S&Ps are, within spitting distance of making new all-time highs. So it's going to be interesting to see how if we do make new all-time highs on the S&Ps, how the NQs end up. If we make a lower high, that's a serious bearish divergence because the group that led the market higher can't make a new high while the rest of the market is making all-time highs. So I'm watching this chart, number one, to see how we act at resistance here, and then if we can get above it, can we make sort of clearance above these old highs that we made in April. I know you look at a lot of the components of the NQs. What are you seeing for those stocks, and what do you think about the NASDAQ here?
Well, it's a little soft, no question about it. And a lot of the leading stocks that were strong, and well, they all went into sort of soft churning and sold off quite a bit. But they didn't quite get into bear territory. So they kind of held and did sort of like a fourth wave chop. And but they're still on weak grounds. So we'll see what happens here. I think NASDAQ should be watched very closely to get some clues to what's happening with the S&P and the broader market.
Yeah, and the bigger picture of where are we going next, right? What's going to be next?
Yep.
So that's something we're keeping an eye on. One of the things that's silver. We talked about gold. Silver, I think, looks very bullish. We've been going sideways for 9, almost 10 months now. Had a nice ABC correction off of that spike high on the Wall Street bets stuff. And we've just been nicely moving up. I think silver is looking very strong. If we can settle above this half square, which is roughly 2854, if we can settle above that area, which we are right now, then the next target is 30. So silver, I think, looks good. It moves with gold, but it also has its own unique characteristics. So gold and silver, still very bullish on those, and interested in watching them and playing them to the upside.
And to think it was just half the price, almost half the price a year ago.
It's crazy, huh?
Yeah.
But I mean, and look at that consolidation. It's just, this is another example of those big, boring frustrating ranges that happen prior to big moves. And I think with silver, you're seeing the clues of it. The main one being, look at these higher lows. You have a low, a higher low, another higher low. All the while within this frustrating range, you're seeing signs of accumulation. And now we're starting to get the acceleration. So I think the breakout is imminent in silver. A couple other things. Copper has had a hell of a move. I mean, it's been absolutely breathtaking, the move we've seen in copper. It looks like the 2-week correction that we've seen could be over. This move down off the high, you can see it was a nice ABCD at the low. What I want to see and what I'm watching for, Barry, is if we can get a higher low on this next pullback. Ideally, if we can sit on top of this half square on the next pullback, or just make a higher low with here, we could be starting the next leg up on copper.
Yeah, I think that halfway point is the level to watch.
Agreed. It's an important one.
The half squares have been very good on this chart, so I think I would just continue to follow that and see.
Yep. So we're watching the character of this pullback, the next pullback, and seeing, where does price settle? Where does the low come in? Is it a higher low? And those are pieces of evidence that will, help us sort of tilt the odds in the favor of what's the next move in copper. This is soybeans. The interesting thing about soybeans, and Barry and I were talking about this for the last couple of weeks, if you look at copper's chart and you look at the grains, the charts are very similar, especially with corn and beans. Beans had a big run higher. They've had a sharp pullback. Again, it looks like the 2-week correction in beans could be over. We want to watch how it acts at not only resistance up here, which is in the 1580, 1582 range, but on this next pullback. If we can get a higher low, again, ideally settling on or above this half square on a pullback, the next leg higher in beans could be starting as well.
Looks pretty close to copper, doesn't it?
Absolutely.
Especially really, half squares.
Yep. So this is another one that we're going to watch the character of the pullback, where price settles, and then it'll give us an edge in terms of what the next move in this asset could be. Let's see. Let's go to the next one. And tell me if it doesn't look very similar. It's corn. Same type of pattern. Big move higher, multi-week correction. This one's been a 3-week correction. It looks like it could be over. We want to watch the character of the pullback here. The strength on this bounce has been even better, because we've been able to settle on top of this square. On this next pullback, do we settle here on the square? Do we settle on the half square? Do we make a higher low? Those are all the things that I'm going to be watching, because if we do, it means the next leg higher could be started. The alternative is maybe we're doing an ABC correction, and if we don't settle on the half square, if we can't settle here, if we take out this low, we may be heading down to this area for support. So you got to be open to both possibilities, just trying to give you the markers and the things we're looking at to determine whether the next leg is going to be started higher or the correction is going to continue.
And for now, it's all very on firm footing. So
very bullish, absolutely. Lastly, here's crude. Barry talked about crude. I just wanted to show you the look on the daily. Very bullish, series of higher lows, big move up, correction, multi-month correction with higher lows showing accumulation, now starting to break out. We're looking for the target, up here in the low to early 70s, around 70 to 71 in here. Yep, 70.65. So crude looks good. The grains and copper, watching closely for signs of and clues as to what comes next, knowing that given their bullish structure right now, probabilities favor if we can get those pullbacks to hold those certain levels on the square and make higher lows, that will have odds in our favor of another move higher there. So that's what I'm focusing on this week, are watching the grains, watching copper, gold and silver, adding on pullbacks, watching crude to see if we're really going to get going there, or if taking profits at 70 or slightly above makes sense. Anything else you're focused on this week, Barry?
No, I think we covered it pretty well, and I think our time is up. So we'll pick it up next week.
Absolutely.
I think we're good.
Best of luck this week, and we'll record again next Sunday and have it out to you guys for the week ahead. Take care, everybody.
All right. Have a good week, you guys.